Hey everyone, today's Friday, the 22nd of April. Um, what you're looking here as right now is just the NASDAQ, which I'll just bring up the S&P, which is the one I want to kind of talk about first. And just show you some interesting things that are happening in the market. So what you're looking at is the weekly chart, right? Actually, I'll bring it to the monthly. And this is going back, since 1983, and you can see the peaks and the troughs. What I've done here is basically I've just, labeled in some key levels and highlighted some horizontal lines just to mark some, key levels that I'm looking at for the short and long term. So what I wanted to show you was if you go down to each of these and you go from the monthly to the weekly down to the daily, you'll start to notice certain things that could happen if certain conditions are met, right? So everyone knows the stock market is going to head down, right? So the question is going to be how far is it going to go down, right? You see this peak here being this is the dot-com bubble in 2000. This is the GFC in 2008. And then since then, we've just basically just gone up and up and up and up. Now, it doesn't really take much to figure out that we're gonna see a correction, right? Where the question is going to be where and when, right? And to that, I would say that this particular cycle is not the same as all these other cycles that we've seen before. This is a lot different. I think that's where people don't seem to really grasp the situation just yet. So this is the dot-com bubble, right? We had this big move down, and this is the S&P. This is not the NASDAQ. The NASDAQ had a bigger move because that's where most of the stocks and companies were affected by the dot-com bubble. And GFC had this big down move as well. Now, this time we're talking about any kind of bubble you can even think of is happening right now, right? It's just a matter of time, pretty much. And at the moment, the market's really being artificially held up. I won't get into that too much. But what I want to show you is the levels that you'll be wanting to watch, right? So I've got here the 1825 as being a key level, right? Now it's not exactly on the dot. It's going to be around and then, right? So you really want to, between 1825 to say 18, if you want to put a range, say 1800 to about 1850 is an area you want to watch as being a key level to be monitoring for a bounce or a breakdown. But if we could be at this level within the next couple, it could be a few days or a couple of weeks. It just depends when the move actually starts. But what you want to see is if we break through the 1825 level, based on the monthly, we're going to be seeing a bit of a fast move down to these levels here, which being the 1500s area. And then from there, we might see a bit of a move too. Once this level is broken, who knows? That's gonna obviously this will already damage confidence, right? This is going to be even more of a big hit to confidence. But if I go down to the weekly, looking at the same levels, 1825, right? There isn't really much chart support, right? If you look here, we see a lot of peaks and troughs. It's really steady move up, but once this level is broken, you're looking at a significant hit to confidence, and that's why you could see a big sudden move down to the 1500s. Now, how long would this all take? I don't know. It could be days, it could be weeks. It's really hard to say. You can't really put a time to this. Well, you can, but it's tricky. It's very tricky. But it's something to be aware of because, like I said, we're going to see a really, really sudden move in the market soon. Now, it's going to really freak people out a lot. So the 1500 could be hit by sometime in May or maybe even June. So, but I think we're going to see by October we're going to see a big devaluation in the stock markets. So that's that on the weekly. But if you look at the daily, you know, we're going to just delete these fibs. There you go. Now, on the daily perspective, you know, I've got these key levels here which I haven't marked properly yet. Being the 204 area, I guess, is a really important level. There's also another level here being the 190, about the 196s, I think, probably around there. No, just around there. That's kind of like a mid level, I guess. It really depends how you look. If you look at the dailies, or if you look at it from the 4 hour, or the 1 hour, or the weekly. So, but there are some key levels here that we're going to see some resistance and some support. So, but once these get broken, you know, you're looking at 1825, and then from there we could be seeing a bit of a move down to the 1500s. So, but you know, you can see here clearly where there's a pattern here, right? We've broken out of this channel, right? This green channel drawn. We've broken out of that channel. So what I expect to see first is some kind of pullback into that channel, right? Before we either see a break back up or a continuation down. So, but you know, on the daily chart, we're looking for some kind of confirmation that we might see a trend reversal. And, you know, we got that yesterday, right? This is kind of almost a doji kind of candlestick setup. So we got the doji here, and then we had a continuation, a follow through basically, and we closed below the previous low and the previous day's close. So that's a good sign. That's a sign that we're seeing a potential reversal. But that's not really enough yet. What we want to see is follow through, right? So if we see another candle, another down day, which is today, then that is going to be a good signal that we're looking at a reversal, right? I won't get into entries and exits and all that kind of stuff. I just wanted to kind of show you that. But you know, you're looking at some key levels here. You got key level here being at 2074.2, which is an area where we saw some resistance and some support. But the key support level around here would be the 204. As you can see, it's bounced off there quite a number of times. So if we do come down to this level, then expect to see some kind of some consolidation. All right. So I'll show you the NASDAQ, because all the markets are kind of the same at the moment. All right. So back to when I was saying about 2000.com, you can see here that NASDAQ had a big move. Got hit, you know, lost pretty much 80% of its value, right? Now, this one's interesting because we're probably going to see something similar happen again, right? Now, I think yesterday's earnings in Google, Microsoft, and Apple and all of them weren't too good. So the NASDAQ did actually go down. And the NASDAQ and the IWM, or the Russell 2000 index has always been a leading market indicator. So when they start to go down, generally the Dow Jones and the S&P start to follow. So, but you can see here, like, you know, key levels here being the 3870 level, or this within this range here. Once that gets broken, you're going to see a massive move down very fast. There's really no support. Right, there's really not really any support at all, and if you that's on the monthly at the least. If you go to the weekly, you know, really not much. You can make a case for, you know, this level being a potential level, being the 2419, give or take. But if I draw a trend line from, say, here, which I think I've already drawn one, but let me just draw it again. You know, we're kind of, not yet, not quite, yep. But yeah, we're kind of into this level here now where we're seeing the makings of a reversal. So on the daily chart, you know, see how we're kind of ahead of the S&P 500. We're moving down a lot further. There is some trend line here that I've drawn here that we can see that you know, it's bounced off at once, come down to retest, and now we're at that level. So we could see some kind of short-term bounce, and then maybe a continuation down, or we're looking for a a short-term move up, come back down to retest that trend line, and then bounce off again. So we just have to wait and see. Yeah. But like I said, the point of this is I want to show you how all this, pretty much everything that's happened since, like if you look from here, where's 2008? 2008 was here. Yep, so around here. This has all gone up. There's really not really anything that should really give it this kind of move, right? So that's why when you start to see the people dump the NASDAQ, it's going to fall pretty hard. So that's that. And there's computer algorithms that are behind all this too, which I won't really talk about. IWM. Again, similar chart setup. Key support being at the 85 level. So once we break that 95 level, you're going to get some rapid movement down to the 85. So similar chart setup. Aussie stock market. Aussie's been in bear for quite some time anyway. Look at the monthly. Look at this, right? You can't get any more uniform than this. That's your trend line there. Now there's no. It's not a sign. It's not a what you call. What's the term for it again? There's no real science around how you draw these trend lines. It's really up to you. Some people like to draw from the lows of the candlesticks and connect them. Some people like to do it from the closes of the candles. I just basically do it. I usually like to see the closes because that's where you want. That's where you want to. I don't really like to do the lows. But a good example here is if you draw, say, from the lows here. Basically, as long as it looks like it's a trend line, right? That's all it really is. You don't do a trend line like this, right? It's just, it's not really connecting anything there. But as long as you've got some multiple connections here, I guess you can make a case for it. So there's no real science behind it. You can see that the market's come back down, went back up to retest these levels. I reckon say minor levels on a monthly basis. Came back down to retest pretty much nothing. Came back up, retested, rejected, came back down, retested previous support, and then followed right all the way up to these levels. See, there's not really any structure to look at on the monthly, so what I'll do is I'll go to the weekly. Probably better that way. But you can see here, this level here being a pretty key level, right, of support and resistance. And the market's pretty much trading around there right now. So there's been a lot of back and forth around this level here. So once we get true direction, we could, once this breaks out or breaks down, then we'll know which direction to trade in. Okay, so, and for, technically the market could keep going up, right? But it's not a good thing if it does. And it would be going up not on fundamentals or anything at all. It's really just being artificially propped up. But in terms of trend lines, I'll draw if you say connect these trend lines here, actually I'll do it from the closes there. Yeah. You can see here, bounced off, right? Came back down to retest, bounced off again, came back down, broke through, right? Broke through, then all the way down, came back up, retested, got rejected. I'll just explain that all again so you can see. So it's come back up. Let's go there. Came back down to retest, bounced off, made a high, came back down, retested previous structure there, came back up, came back down and broke right through that level comfortably on the weekly basis. Came back up to retest that level, gets rejected, comes back down again, and then we're kind of back here now. Now we're kind of at this level now. So you know already that this level here is quite important on the weekly basis. So if we go back up there again, then it'll be interesting to see if we get rejected or we actually see some strength. Okay. But that's the magic of trend lines. Now they don't always have to work. They obviously that could have obviously gone back up. Who knows? But still, most of the time I do find that these levels are important. So yeah, so that's the Aussie market on the weekly. I'll look at the daily quickly. And the daily, like I said, there's that level there that line I drew before here. This kind of consolidation level. So this range here is your trading range, right? This is your range. So there's, if you're looking at it from a strategic point of view, and you're looking at day trading or swing trading, there's, you'd be looking for the peaks and troughs. So the highs here to short down, sell down there, and then buy up here for a move back up, and hopefully making a short here. So that's that there. But until we break out of this level, I don't see the market going any higher, right? As opposed to if the market breaks down the 4,700, then you're definitely looking at a long-term short for sure, right? Also had a pattern here too that has been sitting there for months. So it looks like it might have just touched it too today or yesterday. It's what we call you've probably seen me draw it before. It's called a bearish bat pattern. So the bearish bat pattern completes at the 88%, 88.6%, and it did. Just basically touched it by a bee's dick, right? Touched it, and we're seeing some downward. We've got the doji here, similar to the S&P. Kind of a doji kind of looking candle, reversal candle, and then we're looking for follow through. All right. So if we get another red candle today with a close below 5242, so we need a 5241 or lower close today. Then we might be seeing some continuation into next week on the downside. Okay. Now there's a couple of moving averages. There's I think this is the 50-day that I've got here. You got the 200-day moving average, and you got the 50. Most looking like they're going to converge at some point. So if that happens, then we'll definitely see some kind of support around these levels. You can see some chart congestion here. RSI is overbought, right? So that's another signal there, and so we're definitely likely to see some downside next week. So that's that. I thought I'd just show you that, and hopefully that might help you, or you might learn something from that. So yeah, but yeah, have a good weekend, guys. I'll talk to you soon.